It's
So
really, really powerful.
it is powerful, Ken. And so similar, man. You and I are parallel story. Our daughter Monica is fully involved in our business now.
Mm.
Totally involved for
Oh, that's awesome.
7-8 years. She's the VP. She'll be the next president of all these different companies we have built together. And it's so exciting, isn't it? It's so exciting, isn't it?
It is really fun. Yeah, it's really fun. It's a life changer.
Yeah, it is.
No doubt about it.
So no, that's exciting. It's such a beautiful thing. So let's talk about how to vet a real estate investment firm. Give us some nuggets to our audience, what they should look into. Giving me some money like 9 million or giving you 12 million, and you have done so many transactions. What should they look for?
Yeah, so this is and this is a topic that I'm really passionate about because I love what we do. So the first thing I want people to do, and it's kind of a hard thing to figure out sometimes, but I want them to read the documents and try to figure out, are the terms of the sponsor's terms, the terms of the investment, the terms of the syndication. We do funds now, but the term of the fund or the syndication, is it really put the investor first? Yeah. And so I always want people to ask themselves this one question after you read the documents. Is it possible for that sponsor to do well and you as the investor not do well? If that comes out on the wrong side of that answer, then you need to find somebody else to invest with. Because if it's done correctly, both parties are supposed to win at the same time. Never one over the other, right? The investors always have to come first. So it starts with taking the time to read the private placement memorandum and just see exactly what happens. And you just ask yourself that question. That's your litmus test. So that's the first thing. The second thing I want people to do is to really focus on track record. You've been doing this for a while. You have a track record now. There's a company out there called Verivest. I don't know if you've ever heard of them. Verivest. Verivest.com. I have nothing to do with them other than we paid them a lot of money to come and look under the hood and vet our track record, right? Mm-hmm. How important is that? Because now you have a potential investor who's talking to me who doesn't, they're not going to ask me for 10, 15 years of tax and settlement, but they're just never going to do that. So now there's this company that exists that does that for us. Now it's expensive for us to sign up, but I feel very, very strongly that, we're very proud of our track record. And I feel very strongly that people know that they can trust that the track record is the real deal. And then they do annual background checks and everything else. But the point there is that track record, right? And you want them to do, if you're looking at a multifamily deal with them, it's your hope that their track record isn't all, office, for example, or self-storage, right? You want them to have a track record in the asset type that they're buying.
Exactly. Totally. Yeah, definitely. Absolutely. And how about also the neighborhood? No, go ahead. Yeah.
Oh, I was going to say the last thing I want them to have, and it kind of goes along with the track record, but I want, they need to make sure that they have experience, right?
Yeah.
Hi, you are listening to Syndication Made Easy podcast. We will be right back after this short break.
Hi, thank you so much. This is Vinney Chopra, and thank you for subscribing to my podcast and YouTube channel and Facebook pages and all the great things, and LinkedIn. Connect with me. I come live to you every Friday at 9:30 Pacific with Vinney and Bo show. Please also look at that. And also the podcast, which is my Apartment Syndication Made Easy. The book I wrote a couple of years back became international top seller on Amazon International now. And then we like to bring great guests for you every week or twice a week sometime to give you a lot of great knowledge. So please subscribe. You give us 5-star reviews on the iTunes. The better the guests we can bring, and our ranking will go higher also. Thanks again for following us and really getting the most out of it. Please comment, like, share, because we would love to bring better and better material for you.
So yes, I've been around for 24, 25 years. You've been around for a long time. Yeah. And here's what I'll tell you. These apartment buildings that we buy, they're businesses. They're no different than any other business that you might open. That means they have the same kinds of issues that any business has: sales, employees, finance, marketing. I mean, everything that goes along with a business is we have to deal with in the apartment world. So the reason you want experience is because we never know what's around the corner, right? It might be inflation, it might be a pandemic. You just don't know. And you want that senior management team to have the experience that they need to be able to figure out how you're going to navigate through whatever's coming next. Because we don't know what's coming next. We have no clue. But what's important is with experience, that's the best way for the management team to prepare themselves for whatever might be lurking around the corner. And that's why I feel so strongly about experience. It's really, really important. When I started out, I did it with my family, right? I didn't go out and raise people from money I didn't know, raise money from people I didn't know. So we did it with family, right? That's how I kind of would prefer people get started, because what you don't want to do is have an investor, put money in a deal with somebody that really hasn't done it before. And, you don't want your first investment to not go well, right? Because if it doesn't, you're probably not coming back. And there's just so much money in this business that you need to be here, right? You just need to be here. So those are the three things.
No, I appreciate that very much. And, like you said, the experience is so important. And who are the principals? How many people are in the kitchen, I call it, a lot of people listening to me, because I say too many chefs in the kitchen, you burn the recipe also, because it's too many chiefs and not many Indians, all that stuff. It's so true to find out who are the people, decision makers, how long they have worked together. If there are like that, what are their responsibilities? Who are the people? And what's their track record, their liquidity, all those things.
No, absolutely. 100%. Absolutely.
For sure. And then, of course, the neighborhoods is the other thing I say to my, passive investors. You got to feel good about where you are purchasing or investing.
Yes, I could not agree with you more. Everything in our, they always say, here's what I've learned over the years. People like these little sayings, right? Location, location, location. Yes.
Yeah.
Agree 100%. But what's really important is that whoever you're investing with, right? That firm, they really drill down and understand the neighborhood.
Yes.
And it doesn't, you can do well in poor neighborhoods, middle class neighborhoods, wealthy neighborhoods. It does. What's important is that you understand the neighborhood and understand the financial and social challenges that come with those neighborhoods. That's all that really is important. I'm not suggesting that somebody not invest in one versus another. We happen to like BC class neighborhoods in BC class assets. We like to be in the middle of the road, because that's where the most people hang out, in the middle of that road. So that's what we tend to like. But really drill down on that neighborhood and look for demand drivers. Look for a diverse set of employers, right? We are not fans of locating next to one employer, because one employer leaves, is out, you're done. I mean, you cannot fix that investment once things like that happen. So
true.
That's what I'm going to relate it back to experience. You see, one of the things that experience teaches us is that there's all kinds of risks here. And so what's important, we're a risk mitigator. That's how I view a good part of our job, is to mitigate those risks, so that we protect against the downside. The upside takes care of itself, so to speak, right? So we try to make sure that we just mitigate each and every risk that we identify.
So true. So very true. Let me ask you a question. This is a good one. With the interest rates going higher, what do you see the second part of 2022? I feel, and the reports, that there will be some softening happening. The seller's market is taking a shift now into a little bit into buyer's market. Would you say that? What are your
absolutely yes, absolutely it is shifting. You are absolutely correct. Yes, it's you can just sense that by talking to the brokers every day. The brokers have a tough job during transition times, because they're always dealing with expectation gaps. So when prices are rising, you have buyers who don't want to pay what sellers think they're worth. And then when prices are falling, or they cap rates are going up. They're in the opposite situation. So
Mm-hmm.
brokers are always trying to close those expectation gaps during transitory times like we are now. I personally, I think this is a massive buying opportunity.
Mm-hmm.
We don't get very many buying opportunities in our lifetime, right? We're only around for so many years. And
Yes.
I think we're looking at a very, very huge, very large buying opportunity right now. So we are looking very, very hard and trying to pick up everything that we can.
Excellent. Are you in the East Coast side then, or what are your favorite markets?